love the channel and find it useful in becoming a happy retiree. Subscribe today. We just talked about dividends don't lie. One of the reasons that I prefer dividend-paying stocks to most other investments, one of many reasons is that once you get a dividend payment, there's no muddy earnings that deals with that. It's just cash in the bank. It's simple, and it is accounted for. And that it goes back to the first reason I own dividends is that at least in a world that is very difficult to control anything, from a market perspective, we at least can have a very tight handle on what we're getting in income, and particularly with dividends, because dividends stay very steady for most companies. Sure, some companies get hit and they have a problem with growth and they stop paying a dividend. That happens all the time. The problem, the area that you want to focus in on are having a diversified basket of income-paying companies that don't change or continue to move higher, so that we can control what we are able to control as a big piece of the equation. For the rest of these reasons, so let me give you one more that I just think that it's worth at least talking about on the radio, and I think it's because I had a really good question or comment from a book reader this week that said, "Hey Wes, I'm not so sure about your dividend strategy because I'm worried about paying high taxes on all those dividends." And I think it's partially because I take for granted when I say dividend from a stock, which is different from interest, which is different from distributions. And again, I talk about dividends, interest, distributions. Those three things add up to an overall income. When I say the dividend piece of that equation, the topic of what we're talking about today, I'm talking about qualified dividends. And I think it's a good reminder for me to remind you, when I say dividends, I mean qualified dividends, which qualified dividends come from pretty much any publicly traded stock that you can think of. That is, everyone in the Dow that pays a dividend is going to be a qualified dividend, meaning that it qualifies for special tax treatment. So when I say, and I think this may be something I take for granted, but qualified dividends are taxed at a lower tax rate for most of the time than ordinary income. And this is another reason that dividends to me make a lot of sense. So at the federal tax level, qualified dividend income is typically taxed at a lower rate than ordinary income. And I think that's what's important here. So for most folks, that qualified dividend tax rate is 15%. So even if you're in the 30% tax bracket, or your average federal tax bracket is, let's say it's in the 25 bracket, you're still going to pay qualified dividends at 15. And if you're in the 10 and 15 bracket, your dividend tax rate is actually 0. So for example, if you're if you're married filing jointly, your dividend income would be taxed at 0 if your overall income is less than $75,900. Now, again, there's obviously taxes are more complicated than just a flat number, but if your adjusted gross income is basically, let's call it under 76 grand as a couple, that lands you in the 15 bracket or lower, which means your dividend tax rate is 0. Now, if you're in the 39.6 tax bracket, which is the highest tax bracket, federal, then you're on the hook for 20% in dividend taxes. So dividend taxation is a little bit complicated, but in most cases, you're paying a lower rate on the income you receive through qualified dividends than you would on ordinary income. And that's another really important piece of the equation when it comes to why I own dividend-paying stocks. Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.